Singapore's real estate investment market is back in the spotlight with transactions reaching over 34.12 billion Singaporean dollars last year, the strongest since 2017. To discuss this, we have Jeremy Lake from Savills. Welcome, Jeremy. Let's begin with the main drivers behind this. What's behind Singapore's record investment volume in 2025?
There are probably three factors which I would identify. The first one being the substantial drop in interest rates during the course of last year. 3-month SORA was around 3% in January, but by December it had dropped to nearer 1.2%. So the lower cost of financing was a game changer. Second factor I would highlight is the government land sale program. The government has embarked on an active program of government sites for sale. And developers have been very keen to replenish their land banks. So we've seen a lot of activity there. And then the third factor I'd identify is that there have been one or two outsize or billion-dollar private investment sales. One or two would include Keppel REIT's 1/3 acquisition of Marina Bay Financial Centre. And then also another one I'd highlight would be IOI's purchase of a 50.1% stake in South Beach. So a combination of all of those three factors led to the sharp pickup in investment volumes last year.
But how sustainable would you say is this level of investment activity amidst global economic uncertainties?
The outlook for 2026 remains constructive. We have owners who want to sell, we have buyers who want to buy, and the price gap which had plagued the investment market in Singapore for the last 2 or 3 years has largely disappeared. So and these are the ingredients for an active market. Obviously, the events in the Middle East in the last few days create some degree of uncertainty, and we'll have to see how that evolves over the coming days and weeks. But as we sit today, I don't foresee that to be a major game changer in terms of investment activity this year.
And how about for capital inflows and property pricing? What does this record year mean for trends in 2026?
Prices have probably bottomed or probably did bottom in 2025, and we expect prices to edge up this year. We expect investors to include S-REITs, developers, high net worth investors, and even to a certain extent, and selectively property funds. Singapore remains a high priority market for most investors looking at real estate opportunities in the region, and we feel that investment volumes will remain robust.
Thank you so much for your time today, Jeremy. Looking forward to having you back on the program.
Thank you.
Once again, that was Jeremy Lake, Managing Director of Investment Sales and Capital Markets from Savills Singapore. For more news, visit realestateasia.com.